Days after AVGO reported that they were partnering with Apple, skyrocketing in the after hours with earnings. In today's video, we're going to take a look at what the next steps are for the overall market. Is AVGO doing good, going to be bullish for NVIDIA, AMD, and the rest of the chips? Stay tuned. We're going to take a look at what the next steps are for the large tech stocks. This intro is really, really good. We're going to take a look at what the next steps are for the large tech stocks, the S&P, the NASDAQ, the Russell. We're going to take a look at the bonds, the VIX, all that good stuff. Without further ado, let's get started with the video. First and foremost, let's go ahead and take a look at a chart of AVGO. AVGO, where's the price? Where's the price at? All the way over here. It's at 205. It's up $25. Big tech has been vying to reduce its dependence of pricey, supply-constrained AI processors made by frontrunner NVIDIA, helping Broadcom, which makes advanced custom artificial intelligence chips for so-called hyperscalers. The company forecasts revenue of about $14.6 billion for the first quarter, compared with analysts' average estimate of $14.57. While hailed as a chipmaker, Broadcom has proliferated into a tech conglomerate owing to buyouts such as a $69 billion acquisition of the cloud computing firm VMware. The infrastructure software segment grew 196% to $5.82 billion in the fourth quarter. The company reported fourth quarter revenue of $14 billion, a little bit lower than expectations. But on an adjusted basis, Broadcom earned $1.42 per share compared to estimates of $1.38. This is very, very important because what Broadcom is doing is it's taking the onus and all of the market share away from NVIDIA and AMD. Broadcom is essentially in the United States, right? With NVIDIA and AMD, especially once there's tumultuous sort of environment in China and Taiwan and the Pacific Ocean, this becomes a much easier, stable version of, chips for these companies. And this was such an amazing deal by Apple to partner with this company. It's like the equivalent of Tesla partnering with a very homemade car company that I don't know how to explain it, but AVGO is definitely one of the really, 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 really good partnership. So for this to skyrocket like this, it makes all the sense in the world. There's guidance that's basically showing ahead of time that because of the partnership with Apple, sales or everything are going to be really, really good. So it made all the more sense to be bullish into this earnings date, and that's why we're gapping up like this. And AVGO, the question is the strength in AVGO going to cause the rest of the chip market to go up? Or is the rest of the chip market going to do the opposite? That's the question. But at the moment, AVGO is doing really, really well. If we're just going to dive straight in, we could go ahead and take a look at SMH. SMH is the Semiconductor ETF. SMH is currently up in the after hours. It closed at 243. We're at 247 right now. So obviously, this move in AVGO is very, very beneficial in SMH's eyes. You can also see how SMH is hovering right above this 200 simple moving average. We've been monitoring it. We see how it responds at this level, and it always tends to do a bit bullish. So this level was at 239. It was at 239 a few days ago. We're about to be at 247 if we end up opening at this level here. Okay, so clearly this 200 simple moving average is something magical on SMH. But now here is the thing. Obviously, the market was red. Okay, zooming out, the market was red. Okay. Are you just going to continue leaning long? So here's the thing. It becomes very, very, very difficult to time a top when these large tech stocks are doing so well. When companies like Broadcom are having these partnerships with Apple, when these chips are starting to do really, really well. When AMD, for example, AMD is showing a bottom here. there were some people that started taking some swing calls in AMD in the group. Once again, I fudged up. I wanted to grab some longs on AMD. That was unfortunate. We didn't end up doing that. But they ended up grabbing it around 130. As soon I typed it in the chat. I was like, we have to go long AMD. And they ended up taking the swings. It is what it is. But essentially, my point is, when AMD is showing that there's a bottoming out process here, when it has room to go to the upside, when stocks like AMD has room to go to the upside, when NVIDIA is bottoming out, it's not showing extreme weakness. It still has a bit, it's showing support, okay? It's showing a bit of support. And when Tesla is skyrocketing like this, it's very difficult to be completely bearish on the market. So now, here's the thing. There's three main things that you can end up doing in this sort of environment. Number one, sit on cash. Sit on cash, you wait for a pullback. That is probably the safest thing you could do. You can wait for a pullback on tech, on the overall market. You wait for a pullback. You're just waiting. You don't know, like, if, for example, I'm going all over the place here, but I just really want to explain my thought process on the market, okay? So, well, let's just speak to each other, okay? If we overshoot on the ES, on the S&P 500, we could see 6,200, 63, maybe even 64, okay? That will occur over the next couple of months. By March, April, that's when I believe if we end up rising, like if we continue rising, March, April is going to be the time where we get a pullback. Because just right now, the amount of buyers that we're having in the market tells me that we might just continue rising for the next few months. That's beyond the point, right? So now, percentage-wise, to 6,400, what is this a percentage-wise move? That's 5.5%. To 6,400 on the ES. Let's just take a look at it on the S&P, okay? So on the S&P, it would be around, okay. What is this? 640 basically on the S&P, 5.5%. That is absolutely nothing. That is nothing in the market, especially with the early the beginning of the year. They want to show some sort of bullishness. The Santa Claus rally, that is absolutely nothing. The market can easily rise another 5%. But now, with that being said, okay, we all clearly, guys, this is just clear as day. Obviously, the market cannot sustain itself in such a steep uptrend. Great. So the first thing that you can do is you can wait for a pullback. Yes, you will most likely miss out on 5, 6, 7% gains from here. You'll miss out on this move if you wait in cash, right? But if you wait for a pullback, that pullback might occur somewhere above 6,200. It might even become much more drastic, and we can come back and retest this trend line. Or it can just get really bad. We can come back, fill this gap down here at around 56.50, and then we could end up retesting 5,300 on the ES, and like we'll become nostalgic. We'll come down to 5,300. How much percentage of that is that going to be like a downward move? So say, for example, we go to 6,500. How much would it be? 62. Down to 62, 4.5%. Nothing. That is a nothing burger. That is absolutely nothing in terms of a move to the downside. Down to from 6,500 to 6,050. 7%. We haven't even gotten to the 9 or the 12% range. We haven't even gotten to 10% yet. Down to this trend line, 9% move. Now we're talking. So if you were to essentially wait the odds that we end up having a 9% move to the downside starts to become a lot more enticing, right? But then, of course, how much would it be to 53? Well, 54. I mean, that's that becomes a bit. 56. That becomes 14%. Great. But here's the thing, like, to start aggressively leaning long is not the answer. It is not the answer on these overcooked indices and these overcooked stocks. If you do end up wanting to go long, so the first option is you wait for cash, wait for a pullback. Number 2, you go long with tight stop losses. Maybe not in the exact SP500 or the NASDAQ indice, but you look for which indice basket of stocks would move the most. In my opinion, what I would rather do is this second option, basically. I would rather wait for a pullback and look for beaten down stocks to go long, which is the reason why I wanted to get long AMD, which is the reason why I really want to go long the Russell 2000 into weakness, because seasonality wise, let me just show you guys a chart. This is a chart of the Russell. The Russell skyrockets. The Russell tends to skyrocket during into January and into the middle of January, into February even. The Russell skyrockets. What ends up happening with the Russell, though, is basically until the middle of December, that's when tax loss selling will subside. What I want to do is I want to look for dips. So right now it is December 12th. Tomorrow is December 13th. Then the 14th, the 15th is Sunday. And then on Monday, it's December 16th. December 16th, that week is going to be very, very, in my opinion, it's going to be very, very good to look for longer term plays on the Russell. That's essentially what I'm looking for. Because I want to continue playing this move to the upside, especially. So I'm going to update you guys as I do it and everything as well. But this is just not the time to be extremely, extremely bearish. So what we're going to do is we're going to look for stocks that are beaten down, that are very, very that are very affected by the Russell 2000. We're also going to be looking for tech stocks that are beaten down, that have a lot more upside potential. So I really, really want to look for Mara. I really want to look for Mara. I would love to get Mara around $20, $21. I would love to get just crap stocks for a ride up. And those are the types of stocks that have those huge rips. Roku would be ripping. A lot of these just terrible stocks would be ripping. And that's why in January, penny stocks always do great. That is the month for penny stocks to do very, very well. You're going to start seeing a lot of furus on Twitter starting to pump a lot of crappy stocks, is because seasonality-wise, the Russell 2000 does very, very well soon. So that's purely the reason why. If you start seeing them pumping some crap, it's because they're playing alongside the Russell seasonality. That's basically it. So are we going to go short? The third option. Are we going to go short? Definitely not the time to go aggressively short. If you want to scalp some shorts, if you want to play some moves to the downside, in terms of day trades, we took. So I ended up grabbing some puts. And those ended up doing really, really well. We day trade puts every day. Those ended up doing really, really well. We were swinging puts. Those ended up doing really well. Am I going to continue holding the puts as they cross into 6,300? And am I going to just marry the bearish position? No. Because there's always, here's the thing. Say for example, so now this is where things get really, really messy. If you're just, oh, wow, we have to have a pullback. This is where things get really, really messy. Let's just walk let's just walk through a potential trade, okay? So we're trading options, for example, and you want to get the April puts. Let's just say April at the money SPY puts. It would be the 605 puts, okay? Great. For April. And you're like, okay, as it continues rising, we're going to average in some more. Fine. Let's just see how that goes. So say, okay, this is the first time you got some. Great. You see some weakness. You're like, whoa, okay, I have to get some puts on the close. Great. Spectacular. You get it. Market rises. Makes a new high. And the next SPY, because seasonality tends to be bullish. We see 6,200 in the beginning of June. 2.5% gain on the S&P. The puts would probably be down around 10-15% at this point. You're like, oh, wow, okay, I'm going to buy another one. So you bought another one. Spectacular. 605 put, you bought another one. And this is essentially right here. You want the market to fall lower over here. But you already bought one over here at 62. And you bought one over here. Spectacular, right? And you're like, okay, the market's going to fall much, much lower. Now we're at 63. Then we're at 64. What do you do in that position? Are you just going to continue holding onto these puts into February? Say, for example, just very, very bullish. It makes no sense. Very, very euphoric. This is the equivalent of like 2023, 2022, early year. What are you going to do then? Are you going to continue averaging into your puts? That's a terrible, terrible decision. Because say, for example, you just continued averaging in. And you're like, we're going to get a drop. We're going to get a drop. The drop can potentially just be over here. We can get some sort of a shallow pullback. It's not a guarantee that we're going to get a drop below your initial target. That is the issue with trying to catch tops. In general, let me just explain very, very simply. In general, it is so much easier to catch the dips. So much easier to catch the dips. I've caught tops and everything. I've done very, very good at catching tops. That's obvious. You guys know this for a very, very long time. But catching bottoms on dips works out almost perfectly. So this is back in April. This is back in April last year. Of this year. I posted this on Twitter. I said these are the long entries that I'm going to have for the move upwards, blah, 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 right? Catching dips is so much easier. Look how beautiful this ended up working. I didn't move any of these lines, all right? Look how beautiful this ended up working. All of the targets worked out beautifully. We were short up here at the top. Very, very easy. I sold my puts down here. All verifiable in the Discord. We went long, and we caught the long second, first, and we had the target. Because catching the bottoms is much, much easier. The market wants to rise. It doesn't want to fall. So you have to be very, very, very good at calling tops. And that is very difficult. So here's the thing. It's way easier to just buy dips. We are not at that position right now. So basically, the easiest thing for especially people that are just not beginners, but it's very risky. It's very, very risky to try to short something like this when you are not very sure. Okay, so this is essentially something that you have to take into consideration because we're already up on our puts. We went short. We're already up on our puts. We got into March puts. We're already up, but I'm not holding for a continued move up. Like if they drop because they're up, if they start to hint at going red, I'm gonna sell because I want to be green on the trade. But the short it's already working and it's already worked. So, but am I gonna continue shorting with new contracts? Probably with tight stop losses, but I'm also going to be looking for dips. So, for example, I also wanted to go long on AMD. These puts are already green, but I wanted to go long AMD. We're going to go long the Russell. We're going to catch some dips, hopefully. And this is essentially what I wanted. I wanted a bit of a pullback into next week. Tax loss selling is going to end over the weekend. The early next week is going to be very, very good. And then especially Powell is going to be speaking at the end of this month. So hopefully those end up giving good opportunities. But overall, we are already short and in profit at the moment. And thankfully, we are also in March puts, ironically enough. But definitely not going to be averaging in, and we're going to remain green on the trade. So now, here's the thing. You need to basically just trade what's in front of you. And it's astronomically easier to buy dips than it is to catch tops. So if you are basically watching, you don't want to take a risk, there's no point of taking a risk. Don't try to be a hero. Don't try to go short. Definitely, it's not the time to chase the shorts. We were already in at the highs. Definitely not the time to chase. Don't be a hero. With that being said, the large tech stocks are still showing a lot of strength. We could go through the list of all of them. They're showing tons and tons of strength. And the thing with these next few weeks and the next few days, we have triple witching soon. And most likely, we're going to see a lot of buying out of the bonds. And what has been very, very interesting to watch is that recently, this inverse relationship. So basically, I was saying when this starts to drop, and it starts to drop very, very dramatically, the J&K TLT, the market starts to drop. What we've actually been seeing these past year and a half, is that when this starts to rise very, very dramatically, and it starts to do very, very well, when the junk bonds start to do very, very well, basically, when the numerator, the junk bonds, start to outperform and do very, very well above the TLT, which is the denominator, that tends to be very, very bearish for the market. So let's just go ahead and check this out. Whenever, so it's not perfect, but generally, when this junk TLT start to rise, it shows bearishness in the market. When this starts to rise, you can see here. When this starts to rise, it shows bearishness in the market. So, we're starting to rise. Once again, when this starts to rise, it shows bearishness in the market. So once again, we are at a point where this is starting to rise. Before 2 years ago, completely inverse relationship. But because of the inflationary environment and the lack of, just because we're in a new environment, this is going to be acting differently. But what's very, very interesting now is this is starting to skyrocket. At the same time, the S&P is starting to show bearishness. This is definitely not bullish. Definitely not bullish. But the issue is that equities are getting so many buyers. Now, that's the thing. You have to just make your decision. Once again, going short with tight stop losses. Going long with tight stop losses. Or just waiting in cash. You can do a mixture of both. But when something like this is showing that there's room to the downside, while the junk in TLT is also rising, you can't ignore this. You cannot ignore this. And once again, as it was rising, it showed weakness. Rose again, showed weakness. But the issue is when things like this occur. When it starts to drop, the S&P, which is the red, also dropped. We're not in that environment right now. We are rising. So let's see if this ends up dropping. But of course, this is not the only reason why you would want to go short on the S&P. I'm not giving advice on what to do. I'm just showing you the information of what there is in front of you guys. The VIX too. Okay, all right. The VIX is obviously showing some strength. Not strength, but it's holding support. Obviously, the VIX is holding above support. When the VIX is holding support like this, the VIX, a strong VIX, is bearish for the market. We have not closed below 13. This is not what bears. This is not what bulls want to see. Bulls want to see this completely melting downwards. So if the VIX starts to melt downwards, that's very, very bullish for the overall market. We're not doing that right now. And that's the thing. So you see the IWM starting to pull back. You see the NASDAQ. The NASDAQ was starting to pull back, but AVGO earnings just is green in the after hours. The S&P and the NASDAQ were both pulling back, and the Russell were all pulling back. AVGO is causing it to bounce again. And if they can't pull it down by next week, it's going to be very, very difficult to be bearish after tax loss selling, in my opinion. But I really want to look for dips. We're already short on the SP 500. Yeah, man. This is just a really, really interesting time in the overall market, honestly. But when you look at Apple, clearly it's still showing strength. Obviously, also because of AVGO's earnings, it closed green. Meta, this is not weak. This is not a time to just randomly go short here. Tesla, clearly it's not weak. Just because we got a red candle, this is not an automatic reason to be bearish. We just melted up. Tough to be bearish here. Google, of course, had a bit of a pullback, but we were up almost 15%, 12% in the past few days due to Willow, the quantum computer chip that Google released. Amazon is also not bearish. Amazon and Apple both found support above the 1.618% fib. It's not bearish. Netflix consolidating, and Meta also not bearish, closing above the 4.218% fib. Tough to be bearish. It is really, really tough to be bearish, but if this ends up working, if we end up really pulling back, I was short. We're holding on to puts, and we're already profitable on it. It would be really nice. I wouldn't mind us getting a little collapse here. The odds of that happening the odds of us collapsing very dramatically is slim. But what I really do want, the safest, it's not safe. It's not safe to go short here. Okay? Not safe. What I really do want is for us to dip so that we could buy the dips, and then we could just continue with seasonality. Let the market do the work for us. Just make it nice and simple. I don't want to make things complicated. But when you see weakness, when you see a break of a trend line, when you see it fail to cross back above, when you see large red candles, guys, look, when you see large red candles, 1 minute time probably ES. This is Monday, okay? What are you going to be bullish over here? This is Tuesday, sorry. What are you going to be bullish when the market is showing you that they're selling it off over here at this level? Yes, 60.50 is the JP Morgan collar. That is a very, very sticky level. Are you going to be bullish? It's tough to be bullish after you see price action like this. Yes, we ended up rising, but every single time we've risen above a bit, it's dramatically dropped. So when you see price action like this, intraday, intra-week, if we end up getting a bounce back, my thought process was if we end up getting a bounce back, clear-cut, easy opportunity to go short. And it was good. We ended up going short, I think. We ended up going short yesterday. So as it ripped back up, this is when we ended up going short. So we ended up going short after it showed strength again. Because the initial weakness, the initial bottom, like that it was trying to create, I don't think it was going to sustain itself. So I wanted to, this sell-off that we see, something like this, shows cracks in the armor. That's why I was just like, you know what, Tesla skyrocketing, you're getting a lot of aggressive buyers in the market. Cool. We shorted this, by the way. We shorted this down with day trading. But when you see price action like this in the overall market, you wait for it to bounce back up, and then you go back short. And that's basically what we ended up doing, and that's why we're currently green on the trade. Are we going to continue holding and just like be completely bearish bias? No. But a trade is a trade. We're up, and it worked out really, really well, and it's working pretty well so far. It would be spectacular for it to just continue dropping, and that is my hope and my dream. But, of course, you can't hope for everything in this market, but that's what it is. 30 minutes went by. If you guys are still watching, I really, really appreciate you guys and your support. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe. I don't even need to say that. You've been watching this whole time. But I love you guys. Have an amazing night. Take care.